Good morning, one and all present here. I am Dr. SASIKALA, Assistant Professor, Department of Commerce with Computer Application. Today I take the topic in financial accounting. Based on financial accounting, my topic is partnership firm. A partnership firm is the relationship between individual who has agreed to share the profit of a business carried on by all or any of them acting for all as stated in section 4 of Indian Partnership Act. So according to Indian Partnership Act 1934, what is partnership firm? Relationship between two or more persons to do the business. It is partnership firm. What are the features of partnership firm? First one, two or more persons. So in case of partnership business, the persons are two or more person to run the business. Second one is agreement. So what is agreement? Is a written document between what are the conditions made in the partnership firm. Third one is lawful business. So what is lawful business? It is the business those who are doing in partnership that is lawful. That is based on the what are the rules and regulations framed by the government that should be followed. That is lawful business. Next one, profit sharing. So in partnership business they have to share the profit according to the ratios. Then fifth one, not a separate legal entity. In case of partnership firm, there is no separate legal entity. But in case of joint stock company, they have a what is separate legal entity? The businesses differ from the person. That is a separate legal entity. Next one is sixth one, mutual trust and confidence. So in case of partnership firm, the two or more persons to do the business means they have conflict between the persons. So two persons are involved in the business, they should be mutually understand between what they are doing in the business. Next one, unlimited liability. So what is unlimited liability? What are the liabilities are created in the business or that should be mentioned in the partnership firm? That is unlimited liability. Next one, what is partnership deed? So partnership deed is a written agreement made before starting any partnership firm in which details about all the aspects of the partnership are written to avoid future problems or conflict. Such a written agreement is called as partnership deed. So partnership deed is a written agreement between the partners who are doing in the partnership firm. So this partnership firm, if any problems should be arises in future, that should be avoided. So if you have to create a partnership firm means it is an important partnership deed. Next one, what are the contents involved in partnership deed? First one, the name of the firm. What type of business, what is your nature of the business that should be do in partnership firm? That should be mentioned in the name of the firm, or what are the nature of business to do the partnership firm. Next one, name and details of all the partners. Who are all the persons involved in this partnership firm? That should be mentioned. Next one, date of commencement of a business. What type of business with date? Which date or which year you have to start the business in partnership firm. Duration of the firm is existence. So what are the period? For 2 years or 3 years, what are the period to do the business of partnership firm? Next one, capital contributed by each partner. In partnership firm, there are two or more persons involved in the business. Each person, what are the capital amount should be contributed to do the business. Next one, profit loss sharing ratio. So in case of partnership firm, the business has to be run to earn more profit, or you have to earn profit. What are the ratio that should be divided between the partners? That is profit loss sharing ratio. Next one is interest on capital payable to the partners. What are the interest that should be calculated in the business? What are the sharing ratio that should be mentioned? The extent of borrowings of each partner can withdraw. In any cases, the partners or withdraw the cash from the business. That should be mentioned in the partnership deed itself. Next one, salary payable to the partners if any. In this agreement, in this partnership deed, they have to mention what are the salaries of your partner. Next one, the procedures of admission or retirement of your partners. So in this partnership deed is an agreement that should be contained what are the procedure for admission, what are the procedure for retirement, that should be mentioned in this partnership deed. Next one, the method used for calculating goodwill. So goodwill is an intangible asset. If any partners retire or if any partners admitted to the business, it should be evaluated. So what method you have to calculate it for the methods of goodwill. Next, preparation of accounting, it depends upon the partnership firm. They have a number of accounts should be prepared based on realization, revaluation and capital account, balance sheet, cash account. So what are the account? It depends upon admission, it depends upon the retirement, it depends upon dissolution of the firm. What are the accounts should be maintained in this partnership firm, that should be mentioned in the partnership deed. A mode of settlements of due with us deised partners executors. So what is deised partners executors? If any partners, those who are admitted in the partnership firm, that is admission of a partner. If any partner that should be out of the business, that is mentioned as the deised partner. If the company, if the firm has to be dissolved, you have to calculate the accounts. The procedure followed in case of disputes arises between the partners. What are the conflicts, what are the disputes arise between the partners? The deed is an important document that should be mentioned in this partnership agreement. Next one. Next topic, you have to take what is admission of your partner. In this partnership firm, they have admission of your partner, retirement of your partner, dissolution of your firm and death of your partner. They have a number of accounts has to be prepared in the partnership firm. First one, here see what is admission of your partner. If a person who is admitted to the firm is known as incoming or a new partner. If any person have to be voluntarily come for the business. That is partnership firm, that is admission. What are the cases to have to admit one partner to a business partnership firm means? First condition, a new partner can be admitted only when the consist of all the existing partners. If A, B are partner, C has to be admitted. What is the condition C has to be admitted? Two conditions. A partnership firm suffering from shortage of funds. If the business firm has to make any contribution or they have to need any fund or any losses of a business, one partner has to be admitted. Second case, administrative incapability may desire to admit a partner. So second case, if administrative purpose, management purpose, if one person has to be admitted into the partnership firm. So this two condition, the persons has to be admitted into a partnership firm. So it concerned with the existing partner. And next one, what are the adjustments you have to calculate for the to have to prepare the partnership firm. First one is adjustment required at the time of admission of a new partner. First, calculation of new. So 5 adjustment is important in this adjustment required for the admission of a new partner. First one is profit sharing ratio. Second one is treatment of goodwill. Third one is revaluation of assets and liabilities. Fourth one is distribution of accumulated profit and reserves of your firm. And fifth one is the capital adjustment on the basis of new profit sharing. So this 5 adjustment you have to calculate the admission of your partners. First one is profit sharing ratio. In admission of your partnership, there are 3 ratios to be calculated. One is old ratio, new ratio and sacrificing ratio. So what is old ratio? The existing partners as doing the business in the ratio of 2:1. That is a old ratio. What is new ratio? The new partner is admitted into the partnership firm. They have to bring some amount to the partnership firm. Based on this, they have to make it as a new ratio. Third one is sacrificing ratio. In admission, the old partner has to surrender some of this old share in favor of a new partner. The surrender of shares by old partners is made in the certain ratio. This ratio is called as sacrificing ratio. So old partners, they should surrender the shares to the new partners, that is sacrificing to the new partner. That should be calculated on sacrificing ratio. What is the formula for sacrificing ratio? Sacrificing ratio is equal to old ratio minus new ratio. Next one, second adjustment is adjustment of goodwill. So goodwill is an intangible asset. If any partner that should be admitted into the partnership firm, you have to evaluate the goodwill. So they have to make Goodwill is an intangible asset that is either self-generation or purchase. It is the value of benefit that a business has because of the factors that helps in increasing in profitability. So goodwill is an intangible asset. If your new partners bring cash for the goodwill, what are the procedure that should be made in this partnership firm? At the time of admission, the new partner is required to bring its share of your goodwill to the firm. Hence, at the time of admission of your partner, goodwill will be valued as per the agreement among the partners. So, if your new partner bring cash for goodwill, the goodwill is to be evaluated. They have a number of methods for valuation of goodwill. First one is average profit method. So, average profit method, this is a formula. Goodwill is equal to average profit into number of years purchase for calculation of goodwill. In more of the problems, the value of goodwill should be mentioned. Goodwill is 25,000, goodwill is 30,000. In some problems, you have to calculate what is the value of goodwill in admission of your partner. So, they have a three method. First method is average profit method. You have to calculate goodwill is equal to average profit into number of years purchase. So, what is average profit? Total profit divided by number of years. In this problem of admission, the goodwill value should be calculated based on the adjustment of this problem. Second one is super profit method. So, you have to calculate the value of goodwill is equal to super profit into number of years purchase. So, what is super profit is equal to average profit minus normal profit. Normal profit is equal to capital employed into normal rate of return. You have to calculate the formula for calculation of goodwill. Third one is capitalization method. What is capitalization value of profit or valuation of goodwill? So, capitalization value of profit is equal to profit divided by normal rate of return into 100. So, you have to calculate what is the capitalized value of goodwill is equal to capitalized value of goodwill. So, you have to write the formula for capitalization of goodwill is equal to profit divided by normal rate of return into 100. So, next one, net tangible is, what is net tangible asset is equal to total asset except goodwill. So, in problem balance sheet is given assets and liabilities. In asset side, you have to take all the asset except goodwill. So, what are the asset? Fixed asset, current assets, and cash balance is there, cash at bank. So, you have to leave except goodwill, you have to take total assets minus liability to outside. So, you have to make the capitalization method. What is the formula for goodwill is equal to capitalized value of goodwill minus net tangible assets. Thank you.